Hi, morning everyone. Welcome back to Money Kappa 8. Right, so looking at the S&P 500, will close higher on Thursday session, right? Pushing higher above 7,500 level and extending its bullish momentum to a fresh record high. So, yeah, I believe the rally was mainly supported by the continued strength in tech and also AI related stocks after several major companies deliver better than expected earnings and also an upbeat guidance. Right. Also, I think at the same time, sentiment also improved following the stronger U.S. economic data, which reinforce confidence that the economy remain resilient despite high interest rate. So after looking at the development of U.S. and China meeting, I would say that for now everything looks pretty much positive. Right, so do note that U.S. has cleared around 10 Chinese firms to buy the NVIDIA's second most powerful AI chips, which is the H200. Right, so this is aligned with the U.S. objective, where U.S. and also China agreed to forge more, I would say, cooperative ties, striving um, to build a so-called constructive U.S.-China relationship of a strategic stability. So, looking ahead, I think sentiment remains positive as long as the index holds above 7,500 level. However, after the recent strong rally, short-term profit taking or consolidation could still happen near the recent high, right? So now if you look at the China A50 futures, well, it retraced around 1.41% on yesterday's session as investors turned cautious after the strong recent rally. Right, so the pullback was mainly driven by the profit taking in those large cap stocks, with traders locking in gains near the recent high recently. Right, and also at the same time, I think sentiment was also pressured by the market uncertainty surrounding the Trump's visit to China, as investors remain cautious on the potential further development related to those trade and also diplomatic relation previously, right? So, yeah, for now, I think yesterday's decline looked more like a healthy retracement rather than a major bearish reversal, right? So if you look at the WTI growth futures, were close slightly, just slightly higher on Thursday session, with prices stabilizing after the recent sharp drop. So, yeah, the mild rebound was mainly supported by the uncertainty surrounding the U.S. Iran situation. Continued to keep supply concern in focus. Also, I think the report of declining U.S. inventory, U.S. crude inventory, also helped to support prices, signaling tighter short-term uh, supply condition. However, I think gains remain limited as traders are still cautious over the global demand outlook and also possible progress in diplomatic negotiation. But there is a statement saying that China potentially could help to deal with Iran on the reopening of the Strait of Hormuz. So let's continue to monitor on that, right? So, looking at our local market, our Malaysian market, well, the FBM KLCI closed marginally lower, around 0.04%, and while the FKLI managed to edge just slightly higher, about 0.11%, showing slightly better sentiment in the future market. So, yeah, I think the softer KLCI performance was mainly due to the profit taken in selected heavyweight stocks, with the cash market lacking of a strong fresh catalyst. However, the FKLI, right, stay positive as traders turn slightly optimistic following the stronger overnight US market performance, especially after the continued gains in those tech and also AI related stocks. Yeah, I think at the same time, improving regional sentiment and also bargain hunting near the support level also help to support the futures momentum. So looking ahead, I think the market may remain slightly neutral to positive with uh, uh, neutral to positive bias, right? If the regional sentiment continues to improve. Well, for now, FKLI strength suggests that traders are still positioning for possible new-term rebound despite the cautious broader market participation. Yeah, now talking about the overall market sentiment of our market, of the Malaysia market. I think despite the slight pullback on the index yesterday, sentiment remains neutral to positive as investors continue to monitor regional development. Uh, Despite the gainer was lagged behind the loser, I believe that this is very marginal and positive sentiment from our market will continue to push the market higher. Well, bear in mind that we are still in quarterly result season, right? And despite that, market are not declining that much. Which could indicate that the positivity remains intact in our market, right? So yeah, I just wanted to show you this. Yeah, if you look at this seasonal table of KLCI for the past 10-year average, yeah, as we entered second half of the month, I believe we are still in a good position. Well, if you look at the average in May, which is negative 0.83%, we are now way higher that at 1.37 for the first half of May, right? So I believe that if any pullback to happen, I'm not expecting the pullback for this month, right? I mean uh yeah, for this month maybe it will happen in June, but despite that there are still buying opportunities into the following month in July, August, right? Potentially a rebound will happen in this month because we are expecting for the banks to pay out dividend and resulting to a higher KLCI market, right? So now if you look at our Malaysia trading stock, so today we have Inari and Metron. So the stock is on its breakout formation higher at RM1.95 level on a strong volume. So with that, we expect the momentum to keep bullish and the stock able to propel higher to test the next resistance at RM2.10, followed by RM2.25 level. So if the stock to clear below RM1.80 level support, this could reverse the course and trend lower below this 21-day moving average. Also, next we have Solar Vest, right? The stock is experiencing a pending breakout formation at RM2.80 level. So if the stock to remain bullish, we expect the price to reach RM2.94 level, followed by RM3.10 level for the second resistance. So do keep an eye at the RM2.65 level for any attempt of reversal. So we have one breakout stocks, which is Neri and Metron, and also one pending breakout stocks, which is Solar Vest. And looking at the FCPO, well, it fell sharply yesterday around 1.01%, breaching the 4,300 support level, our support level, with sentiment turning more bearish in the near term. So I believe the sell-off was mainly driven by the weaker soybean oil and also softer um, prices, which pressure the overall edible oil market sentiment. So I think the bearish move was further accelerated by the technical selling after the price broke below this 4,300 support, triggering more downside momentum um, into the close, right? So looking ahead, yeah, this commodity, we expect it to remain weak and volatile unless price can recover. But for now, we are aiming for this 4,300 level. and also 4,200 level for the second support. Sorry, I mean it has breached below 4,400 level, and stop loss remains firm at 4,700 level. Right, so that's all from me. I'll stop here and pass you to Adam. Thanks everyone, and happy trading. See you guys next week.
All right. Good morning, everyone. Today we have a results review on Ranhill, which announced its 9-month FY26 earnings, where core earnings reached about 125 million ringgit, and this exceeded ours and street estimates, making up 107% of ours and about 97% of street estimates. So this very strong outperformance, we reckon it is due to better cost management in general, as we view that the top line level is still pretty much intact with our what we project. For example, 9-month FY25 GP margins was at 30%, while on our own assumptions initially it was at about 25%. And looking at the third quarter FY26 alone, GP margins was very strong at 34%, and this is the highest since the fourth quarter of FY19, which saw a GP margin of 47%. Even if we were to look a year ago versus the latest quarter, third quarter FY26, the GP margin a year ago was at 17% versus 34% during the latest quarter. And looking at the segmental PBT sections, water segment saw its PBT margins for the third quarter FY26 being at 17%, the highest amongst the 3 quarters in FY26. Unfortunately, there's no comparison that could be made prior to first quarter FY26 for the PBT level, given that there's no such disclosure that was done prior to that. So all in, we view that the overperformance was due to better cost management, or in other words, lower cost of goods sold. And with that, we actually bump up our FY26 to earnings by 51, 49, 42, and 47% to impute better GP margin assumptions. But our latest adjustments also take into account potential risks coming from higher electricity tariffs and maybe a bit from the higher chemical costs. So with that, we arrive at a new SOP derived TP of 2 ringgit and 88 cents from 2 ringgit and 35 cents previously. So that's all from me, everyone. I will pass on the floor to the next speaker, Queenie. Thank you.
Okay, thank you, Adam, for the presentation. And now I would like to present on the IPO note that we have just published this morning. I'll just share my screen now. Okay, so we have an IPO note today on this Bascap Berhad. So Bascap is a leading bus manufacturer in Malaysia, based in Malaysia. Okay, so Bascap under the SHL brand is one of Malaysia's top 3 bus body manufacturers with 58 years operating track record since 1968, while also serving the Singapore market. So leveraging its long-standing expertise in bus design and manufacturing, the group offers a wide range of models of buses, including single-deck, semi-high-deck, high-deck, and double-deck models, catering to stage, school, worker, shuttle, express, and tour bus applications. Supported by a diversified base of over 300 customers, comprising transport operators, travel companies, and government agencies, is well positioned across the transportation and tourism industries. Okay. So for its growth, we notice it will be supported by the tourism industry in Malaysia, as well as replacement cycle support. So the number of new bus registration rebounded strongly from 276 units during the pandemic to 1,355 units in 2025, surpassing pre-pandemic levels. According to Smith Sandel, demand for newly built buses is expected to remain supported by Malaysia's growing tourism industry, government initiative, and transportation regulations. So the continued need for intercity, interstate, and cross-border travel is expected to drive demand for express bus services, which represent the majority of bus cab's key customers and revenue contribution. If you look at its major customer, mostly they are doing express bus, where their top 5 customer mostly from travel companies, for express buses. So in addition, so as for express bus, there is a regulation on it where they are only allow a 10-year lifespan for express bus. So this will create a recurring replacement demand for express bus, while record tourist arrival, where we can see in 2025, and Visit Malaysia 2026 campaign are expected to further support the industry growth. Okay. So the group is right now running at a very high utilization rate for their manufacturing. And also see strong demands, okay, as they always receive purchase order, and the group can actually see order up to 6 months already, okay. So we see a demand views expansion. So the group has expanded its manufacturing capacity from 1 production line to 3 lines in July 2024, bringing total capacity to approximately 168 units. So in the previous year, actual output was 131 units, representing a utilization rate of 78%. For the current year, utilization rate is expected to improve to around 90%, with both utilization and average selling price anticipated to gradually increase in the coming years. So by 2029, the commissioning of a new automated plant is expected to shorten lead time from around 4 months to 3 months, while improving production efficiency by approximately 15%. So if you ask me about peers, the closest peer to compare to would be one company listed on Hong Kong, which called Gemilang International. They are also a Malaysian company, but they are listed in Hong Kong. Okay, so we put it under international peer. And then as for Malaysia listed company, there are actually none competitors or peers comparable to this bus cap, but we do put down 2 bus operator, listed bus operator, because this one is related to bus, so we just put it down, but we do not use any of their PE as a reference, okay, because they are not direct peers to it. But we make reference to the 3-year forward PE of FBM small cap, okay. So the mean is about 10.8, okay. That's why we ascribe the PE. Ascribe is FY27 earnings and 11 times PE multiple to arrive a fair value of 38 cents. Okay. So its IPO valuation of 6.6 times FY27 FPE remains seems significantly below the valuation of Bursa Malaysia Industrial Products and Services Index, which is more than 15 times, and a small cap index of 10 to 11 times. So we deem it as undervalued. Okay. Of course, there are some key risks for our forecast here, our earnings forecast here, and hence affect the fair value, which will include absence of long-term contracts with customers, shortage of foreign workers and subcontractors, non-renewal of business licenses, fluctuation in aluminium and steel prices where they cannot pass down, if they cannot pass down, slowdown in local tourism industry, and competition risk. Okay. So with a fair value of 38 cents, that represent from its IPO price of 23 cents, that represents more than 60% upside. Okay. So closing application date for this IPO will be today, 5 p.m. and indicative listing date will be 3rd of June 2026. Okay. Yeah. And so you can see that for utilization of IPO proceeds, most of the money goes to the new plants. Okay. Okay, so that's all from us today. Yeah, we would like to end this morning kappa session today. Thank you, everyone. And we hope to see you guys again next week. Thank you.